So this morning, we're going to cover a couple things, but I wanted to read something this morning that came out by Realtor.com. And it emphasizes how bad the media is and can be. By that, and Lanier heard me, we were talking about just before we started Huddle, they try to create so much drama because there's this, I don't know what it is about human beings, but there's this gravitation toward bad news rather than good news. If there is something bad going on in the news, it gets a lot of highlights. At the exact same time, there could be something very, very good going on, but the ratings are going to go toward the bad news because that's where humans have a tendency to gravitate toward that. So people who are selling advertising, people who are trying to create more looks, if you will, oftentimes what they do is they try to publish things that are, quote unquote, make it look like it's factual information, but present it in such a manner that makes it look negative and makes it drama. When I was in college, I took a class called How to Lie with Statistics. And I found it very interesting is that you could take a variety of different statistics and the manner in which you presented it made it look really bad, made it look okay, or made it look really good, and it's the same set of numbers. So I'm going to read to you this parts of this that came out today from Realtor.com so that you can see what kind of stuff is being published that your clients and my clients, buyers and sellers, are reading. And we wonder why they're sitting on the fence out there. This is why. Listen to this. The bottom line, home buyers and renters hoping for some financial relief in 2023 will likely be disappointed. Now, what does that infer?
It's going to be less affordable next year than it was this year.
That's one thing. What else does it infer? It infers that, in my opinion, that people are anticipating the market's going to drop. And they're going to say they're going to be disappointed. I'm like, what are you kidding me? You want prices to go down? That doesn't even make sense. Why would anybody that's in real estate want prices to go down? I mean, that's where we build our equity. Now, I don't want them to go up at 20% a year like they did in 2020, 2021. I don't want that because even though I'm a homeowner, I don't think it's good for the market. I think it's unhealthy. I've always just loved Atlanta. We'd have consistent 3 to 5, 6% growth every year. All the years I've been here. I started buying homes in 1981 in Atlanta, and it's what it was, 3 to 6%. It was wonderful. It made it affordable. People from the West Coast come here and pay cash for a house. I mean, it was amazing because we were consistent. So there's 20, 21% we don't need. But when Realtor.com comes out with this, say they're going to be disappointed, I'm thinking, are you people idiots? You want housing to go down? Then they say Realtor.com 2023 forecast anticipates home and rental prices will keep climbing next year. Well, they're right. They are going to keep climbing. But the way they write this makes it sound like, oh, this is terrible. They're going to go up another. And then they do come on and say, it'll be more modest. But, you know, instead of kind of encouraging people to take action, they're creating drama. Well, maybe you need to just sit on the fence a little bit longer. Mortgage interest rates, which have become the bane of many first-time and other buyers who can't pay all cash, will remain high. Well, that's what they're saying. Are interest rates going to be higher than they were in 2020 and 2021? Absolutely. But what is high? Is high 4%, 5%, 6%, 7%? What's considered high? I remember when we were approaching back in March and April, we started approaching 5%. People thought that the world was coming to an end. If we have 5% rates right now, what's going to happen to all those people sitting on the fence? They're going to come jumping down and start buying houses. So what is high? They don't talk about that. All they do is say they're going to remain high. when people hear that, they're saying, well, wait a minute, if they're going to remain high, maybe I shouldn't be doing anything yet. That's the kind of garbage that your buyers, my buyers and sellers, that we're hearing and seeing on an ongoing basis. It's going to be a tough year for home buyers and home sellers because the overall housing market is going to be difficult. That's what they publish. I mean, I'm reading this and I'm thinking, where's the encouragement to get people who want to buy a house to go take action now and start building equity? Where's the encouragement for somebody who's got a home that wants to size down to go and do that? Why not do it? I mean, why sit on the fence and wait? Well, they're sitting on the fence because of this kind of garbage. And this is just one, and this is Realtor.com. And this gets a lot of views. When you pull up an address on Google, the 2 or 3 things come up first. There's Zillow and Realtor.com. This is the kind of garbage that's coming out. So the more and more that I see your posts where you are encouraging people with some real facts and encouraging them to do something else, I commend you, because we really do need to. I mean, it's not so bad. I don't know if how many of you saw my email or Mike's email about interest rates this morning. I was able to quote somebody. It was so good to be able to quote somebody a 6.5 rate with no points. I mean, it was wonderful. I mean, I'm like, okay, because for the last few months, it's been 7, 7.5, 7 5/8. Even did one at 7 7/8 with points. And all of a sudden, I see 6.5 with no points. I'm like, thank you. Now, will it stick around? Well, I don't know. I mean, I have a suspicion we're going to see it bouncing for a bit. But as I put in the note, if Mike forwarded it to you or if you saw my note, what you're going to find is that on December 13th, that's an important day because that's when the next CPI number's coming out. And if that CPI number does come down, somewhere in my note I put down about 55 basis points. It doesn't even have to come down that far. If it comes down maybe 25 to 30 basis points, we're going to see interest rates at least stay where they're at. If they come down the full 50, we are going to see rates come down even further, which is going to be a good thing. That's not bad. That's going to start loosening up the market for what should happen come January, February, and March, which is what I'm kind of hoping will occur. So we've talked about that quite a bit. Any questions before I go into what I wanted to just quickly chat about for today? All right. I've given you this information before. It's not on the board, so you might want to write it down. If you don't, let me know, and I can email it to you after. But with rates fluctuating so much and people trying to find out, should I buy, shouldn't I buy, what should I be doing, what I want to give you are what I call the multipliers, so that you don't have to get out a mortgage calculator. You don't have to look at a document. You just have the multipliers in front of you. If you've got them, people want to know what their payment's going to be, like that. So I'm going to start with the kind of the more typical rates right now, and then we'll go a little higher and a little lower. So let's just take 6.5%. The multiplier for 6.5% is 6.28.
What are we multiplying?
I'm sorry?
Loan amount times that?
Yeah. What you do is you take the number of thousands. So if you have a $100,000 loan, you don't take 100,000, you take 100 times that multiplier, and that's your principal and interest payment approximately. So on a $100,000 loan, I would take 100 times 6.28, and that would be $628. That is approximately my principal and interest payment. If it's a $450,000 loan, then I'm going to take 450 multiplied times 6.28, and that's going to be my principal and interest payment. So for 6.5, we're going to use 6.28 as the multiplier. For 6 3/4, 6.75 interest rate, the multiplier is 6.45.
6.45?
Yes. For 6.25, it's 6.13. So those are probably the three most typical today. Now that might change next week and the week after, so let me give you a few more. But right now, those are probably the more typical ones. And these are for 30-year rates. These are not 15-year.
6.1.
So 6% is 5.98. I always use 6% as kind of a benchmark. I just take 6% is 6. It's actually 2 cents below that, but close enough. 5.75 is 5.81. Let's go in the other direction, which I hope doesn't happen, but if it did, 7% is 6.61. And 7.25 is 6.78. Now, here's how I use this, and I think some of you do this already, but if you're not, I would encourage you to do this. One of the questions people love to ask me, other than what are rates, they see me, it's like, do I have a sign on my head that says, ask me what the rates are? I mean, I go to the club, and everybody, I've been going there, I've been a member there for 21 years. And everybody knows I'm in the mortgage business, so there must be a sign above me that says, ask me what rates are. So I'll go in there on Friday evening for what I call the 19th hole, and people want to know, Greg, how are the rates? How are the rates? I'm like, what do you, I don't know, I don't care. It's not true, but I mean, everybody's asking what the rates are. So, besides asking me what rates are, the next question I get from buyers and even potential sellers are, what's my payment going to be? Do they ever ask you that? What's my payment going to be? And they have to feel like they got to ask you, they've got to ask me, and they really don't have to. Because if I give them these multipliers and I show them how to use it, it's very simple. I take the 6.28, multiply times number of thousands in the loan I'm looking at, and that's my principal and interest payment, period. Even somebody who has never taken math and only uses a calculator, I'm teasing some of the younger folks in here, I'm sorry. But, it's okay, it's easy to figure out, right? Now, that's your principal and interest payment. And people want to know, well, what are my other parts of my payments? Well, you and I both know there's 3 other parts of the payment. Actually 4, but 3 in your mortgage payment. Property taxes, homeowner's insurance, and PMI. And if applicable, HOA. But that doesn't come into the mortgage payment, but it is considered part of your debt to income ratio. So we're going to look at, now they've got their multiplier, they can figure out their principal and interest, which in Georgia is the largest part of their payment. I notice I said in Georgia, because there are some states where your property taxes are more expensive than your principal and interest payment. Yeah, it's terrible. Some of them are just brutal. Oh man. But anyway, that's your principal and interest payment. So your property taxes, I tell people, look it up. I mean, if you're looking online, it's going to be on probably one of the sites. If the number looks too low to be real, it probably is too low. Take a moment. Everybody knows how to Google things. Go online, go to the county, and look up the 2022. 2022 taxes are out everywhere. It's a great time of year. You can go to the county site, look at the property taxes. It'll tell you what the taxes were for 2022, and that's what you can expect for 2023, unless for some reason there's a weird exemption, like an old man exemption, as I call it. And I can call it an old man exemption because nobody in here is older than me. So I can get away with that. So you can look up your taxes. But if you ask me what your taxes are, I'm going to do an estimate. If I've got time, I might look it up for you, but by that time you could already do it. So it's not that hard. Now, homeowner's insurance. Homeowner's insurance, that's a ballpark number. If you're buying a home for $200,000, I'm probably going to use $100 a month. That might be a little high, but probably $100 a month. If you're buying a home for $300,000, I'm probably going to use $140 or $150. I mean, it's an estimate. If you're buying a home for $600,000, you're probably going to be closer to somewhere between 170 to 200 a month, depending on the age of the home. So use a conservative number. It's not that big a deal. And you know where people are looking. So if they're looking at homes between $300 and $350, you can just tell them, hey, for homeowners insurance, just to be safe, use $160 a month. It may not be that high, but just put that in. So use the multiplier to determine your principal and interest. Go look up the taxes, because otherwise I'm just going to estimate them, and you'd rather know something more certain than my estimate. And just use $160 a month for your homeowners insurance. There'll probably be less, but just use that. Okay, now they've got that number. Now the only other number they need is PMI. Again, don't ask them to calculate it, you calculate it for them. And what I mean by that is if they're buying a home and they're looking at homes and they're going to get a $300,000 mortgage, they can always call and I can give them a more exact number, but on the high end, I simply take 300, and again, you kind of get a feel for, are they doing FHA, are they doing conventional? But if they're doing conventional, I'm going to probably just look at the loan amount times 0.0005 divided by 12.
So that number is zeros again?
3 zeros and a 5.
Okay.
Because that'll give you that'll give you the annual divided by monthly, divided by 12 gives you the monthly payment. Now, that's if they're doing conventional. And again, that's a high number. It's probably going to be lower than that, especially if they're putting down 10% or 15%. And if they've got high credit scores, it'd be less than that. But that's just a ballpark. That's all it is, just so they can say, oh, I know this is what it's going to be. If it's FHA, pretty simple, 0.0085. And I think I said 0.0005. It's 0.005. It's 2 zeros, not 3. What's that?
0.2 zeros.
That's correct, and then 5. FHA is 0.0085. And then that's the annual divided by 12. So again, it's not an exact science because they don't know exactly what house they're buying, but they can get a real good look at what their monthly payment's going to be. So if they're driving by a home and they look at a home for $300 and they look at another one for $350 and one for $400, and they're putting down 10%, they can rapidly figure out what their monthly payment difference is. And as you can tell, the multipliers are not that different. So the rate difference between 6.5 and 6.25 it's 15 cents. So 15 cents just isn't going to move the needle very much on a mortgage payment. It just doesn't. So this is the kind of tool that I want to give people. It's not that I don't want them to call me. I do. Don't get me wrong. I want you to call me. But I want to give them something in their hands that makes them feel like they're in control of what they are doing. And as I tell them, hey, use this, but if you want confirmation after you've used it and you're getting real serious about it, pick up the phone and call me. Let's double check everything. And then they feel, okay, good, I can still call Greg, or I can still call Lanier. All right? So those are the kind of things that we want to do to just, again, put you and I in a position of truly being their confidant, truly being their expert. Any questions? December 13th, big day. We want that CPI number to come down a little bit. All right, thanks.